Welcome traders to this week's analysis of DXY. Thanks for joining me in this analysis. Now DXY came right into that level and started to move up. Remember in my previous analysis that I've been actually posting around towards the end of August, I mentioned that this candle of August month was supposed to close below the previous month's, like July's month's low. And if that was the case, then September was going to be bullish. And that's exactly how it is moving right now. It came to water cluster moving average and started to move upwards, and we were able to actually take profits not based on DXY, not just trading DXY, but based on this move. We were able to find good positions on other currency pairs. So if I go to the weekly time frame, on weekly time frame previous week I mentioned that this was a piercing candle. Um, the previous week was supposed to be bullish, and that's exactly what has happened so far. But if I look at the daily time frame, what's happening right there is that we created this bottom double bottom here, then it started to move upwards, and we can clearly see that market created a W structure and it fell down. Now, if you bring back the original analysis that I had, I'm still expecting market to go up, but because market actually fell down from here. Now, what we need to do is we need to reassess this little structure that we have. So this level is still important, and I'm going to just remove some of these Fibonacci levels and these arrows. So what do we have here is we have now a different W structure. So this is the one that actually worked out. So market came to 61.8 and then started to fall down, and that was kind of expected. And then if we look at it, if the market actually starts to move upwards now, what we can expect is that if I draw fib on it, okay, this is looking like it's going to go to this level. So instead of looking at the previous level, now that is still important, but we also have another level which is 9413, and this is what we can expect. If the market breaks through this of 93.66, then it is expected to go to 93.191, then it is expected to go to 9413, and if that is broken, then we can expect market to go all the way into this zone of near about 95.6, around that level. But we'll see how the market actually reacts around this zone. This is turning out to be decision point for DXY now, and this all actually happened because of this move that happened last week. This actually showed that market was little bearish at the time. However, the candlestick pattern is showing that there is a chance that market can go back up to 93.66, and if that is broken, then we can actually expect market to move upwards and reach new highs around here. Let's look at the weekly time frame once again. Around weekly time frame, we have this moving average, which is around 93.87. And if we bring back um, our levels, then we can see that it confluences nicely with 93.91. So that is what we are going to look for. If the market starts to go above 93.66, then this is the one where market can expect downward reaction, because we also had downward reactions two times from the same level. So this is an important level to look at, 93.91. If that's broken, then we are looking for something like this, and the reason behind that is present in my previous week's analysis, where I mentioned the entire WNM structure, and we discussed about from multi-time frame analysis point of view. So if you haven't actually check it out. Go and check it out, because that has a lot of material in there. This analysis is just an update on the previous weeks. So hopefully you enjoyed this. Hopefully you found this useful. If you did, hit the like button, and in the comment section let me know what you think about this analysis and what is your opinion on dollar. And do not forget to subscribe and share. with other traders and trading communities. Thank you.